All right, everybody. Thanks for joining us again at Equity Guru. Today, I've got Jonathan Wiesblatt. He's the CEO of Rockridge Resources. Jonathan, for those that aren't familiar with Rockridge, how would you describe the company?
Yeah, hi Chris. Thanks for having us on your program. So Rockridge is a junior exploration company here in Canada, listed under the ticker symbol ROCK. We have two flagship properties. One is in Saskatchewan. It is a VMS copper play with upwards of 200 plus million pounds of copper at surface with good grade in an area of decent infrastructure. We own 100% of that property. And then the other asset inside the company is an earlier stage gold exploration property, which we've just completed some drilling on this past summer. It's called the Raney Gold Project. And that is about 150 kilometers southwest of Timmins, right here in the Swayze mining belt.
So let's cut right to the hard stuff when it comes to gold right now. It seems like the markets are giving gold no love whatsoever, despite it being I think a global situation where normally gold is seen as a safe haven. There's war on the planet. There's tumultuous times, and yet gold seems to have sort of slipped out of that place where it would normally be loved right now. What do you put that down to?
Yeah, so I somewhat disagree, Chris. Gold, I think, has managed to, maintain some love. We're up from, some of the lows, the recent technical lows of 1600, 1650, and we have been hovering in and around 2000. Like we've been holding that level in an environment where the US dollar has been incredibly, incredibly strong. As your listeners all know, there is typically an inverse relationship between the dollar and the price of the bullion. So I think that gold has held up, given the things that you mentioned. So rampant inflation, global instability, and other issues facing the global macro environment. So gold is okay. What's not okay are the underlying securities that have exposure to gold. And so if you look at the GDX or the GDXJ or just about any junior company that's trading on a global exchange, they are entirely out of favor. Investors just do not want any exposure to this asset class right now. But I've been around as a fund manager prior to joining Rockridge, and I know that these cycles they come and go, and this is now the time in this particular cycle when executives like myself and groups like Rockridge, they really want to put their heads down and build value inside their companies, explore and find ways to add value to shareholders. And so that's what we are busy doing at Rock. So that's my explanation for where I believe the sentiment is for gold versus gold equities and what companies like ours can be doing to add value.
You've got that copper exposure, which I think is probably the thing that a lot of people have really been sort of pointing to and thinking copper is gonna have a real minute at some stage. Like it really just seems supply and demand would dictate that copper is an area that you want to be.
Yeah, so I've been talking about this for a couple years now, and so anybody who's followed the story has heard me really talk about my excitement and the company's excitement about copper markets. So the decarbonization trends that are going on globally, the electrification of the global auto fleet, in addition to electrifying many global industries, reduction of the world's use of fossil fuels, it all speaks very positively towards the base metals like copper. And I think that given the global macro backdrop, which includes a slowdown in the world's fastest growing economy like China, and other factors, I think copper is held in remarkably well in and around $4 per pound. When I first got involved in capital markets, copper traded at well below $1 per pound. And so now we still have a good price, but I agree with you, copper will have its day in the sun. And that's going to be propelled by continued move on the demand side but even more importantly, on the supply side. We have seen, like in most commodities for the last 10 plus years, a complete lack of reinvestment into finding the next economic deposit, expanding on large global deposits that have chewed through a lot of their high grade portions. There really hasn't been any money spent on infrastructure in advancing the global supply chain for copper and other base metals. When the demand starts to pull and the supply can't keep up, that's where you get your real supply response. And I do believe that's going to happen over the next few years.
Now, you guys have been drilling to get more data on the properties that you have. Uh, I think for a lot of investors, they sort of see the timelines on resource exploration companies as being a little bit stretched out for the modern day investor that's looking for opportunities every morning at 6 a.m. But you guys, it
Yeah.
seems the train, to use an old phrase, the train appears to be leaving the station soon for Rockridge on your drilling side.
Yeah, so I think a lot of investors today, especially those that are just getting into the early stages of their investment journeys, investors look for instant gratification. It's hard to provide instant gratification when you're looking at the mining industry, the
Yeah.
commodity complex in general, right? It takes time to go from an initial discovery to the build out of a mine and cash flow and dividends and EBITDA, right? It's a long time. However, companies like Rockridge can provide investors with imminent catalysts to create value in the share price. And one of the ways in which we've been doing that over the last, call it 6 months, is through the drilling of our project, our gold project here in Ontario, the Raney Gold Project. So over the summer, we completed 8 diamond drill holes, or approximately 2,000 meters. We have told the market that pending the success of that meterage, we could potentially look to go back to Raney and drill some more holes. The samples for those 8 diamond drill holes, they've been recovered and sent to the lab for assaying for the most part. We're just waiting on the last batch to go in now. So news flow should be fairly robust in the coming weeks. And I want to remind people that are following the Rockridge story, the purpose of the program at Raney this past summer was to follow up on a successful drilling program that we finished back in 2020. And the program here was designed to evaluate the strike length, the depth, and the expansion potential of the high grade zone at Raney. Back in 2020, we did have an intersection of about 28 gram over 6 meters. So we are in the right district. We are in the right real estate. We are 35 kilometers from Newmont's Borden mine, which has a lot of common characteristics to what we're seeing at Raney Gold. And the last thing that I will say from actually visiting the project this summer and looking at some of the core, that numerous holes have contained visual indications of mineralization in the core. So we're excited. We're excited to get news out to the market, and this is really the best way that we can drive value to the shareholders.
I think companies like Rockridge are interesting in as much as a lot of mineral exploration companies, there's a kind of a trend to do only as much work as you need to survive. You guys are clearly you got your foot in two different boats. You're doing the work on both sides, and you're clearly trying to get to a place where you can move this thing through to nearer production. Is it kind of frustrating to look around sometimes at the mineral exploration space and see that there are a lot of pretenders out there that maybe put a bit of stigma on the others?
So I don't like to go and really look at the other companies and really see what they're doing. It is interesting to look at the companies for relative valuation purposes, and the companies that are doing great things. I mean, clearly you want to replicate that, because hopefully if what they're doing to drive success and you can replicate that in certain ways to get better valuation, then that's interesting. But I tend to really stay focused on the ways that Rockridge can drive value and manage its treasury and be able to survive throughout these very tumultuous times in commodity markets and commodity cycles. As the CEO of this company, it's really my job to make sure that the programs are well funded, the treasury is being managed responsibly. We hold on, we manage our burn so that we can survive till when things get exciting again in the markets. And these things they ebb and they flow all the time, and we just have to wait until the next cycle and the wind hits our sail.
Right. What is the status? I know you're drilling Raney, and you've got data presumably coming out in the next few weeks. But what's the status on your other project, the Knife Lake?
Yeah, so we own 100% of Knife Lake. We would like to get back to work at Knife Lake at some point in the near future. The real decision to move resources and efforts to Raney was twofold. One, gold prices were firming up when we made the decision to go and do that, and economics were very favorable. So drilling holes at Raney in Ontario, where we have full road access, infrastructure is robust. We can get trucks in, equipment in. It really was. We got a better bang for our buck to go to Raney today,
Okay.
given the backdrop in the commodity cycle. So it really, for our shareholders, we felt that the relative value was better to go into Raney to drill than to have a program going back up to Knife Lake at this particular juncture.
Got it.
With that being said, there remains a substantial amount of value at Knife Lake. The exploration potential is incredible, and we have a maiden deposit upwards of 200 plus million pounds of copper at surface.
So you've got some big neighbors that are active in the region. So it's a nice card to be able to pull. On the Raney side, sorry, it's an interesting choice to go after gold and not copper. But for, I guess, a company with a $4 million market cap or so, you really got to be really protective of your treasury and get in there where you can be guaranteed to really extract the most value.
Yeah, Chris, I think that's right.
Would we assume that on the Raney project that if the results are good, that you'll be drilling in the short term there to increase what you found?
I think wherever the company believes it can drive the most value, I think that's where we'll point the rigs. So if the results are good and we believe that it's that we can go back up there and follow up and drive more value and work our way to hopefully one day a resource and a deposit, then I think that you can be assured that that's where we'll direct our efforts. And the same goes for Knife Lake, right? It's just I think our shareholders are looking for us to exploit both assets as best as possible in order to generate value.
It'd be nice to be in a bull market where you could raise enough cash to go after both. But does the weather the weather and the environment at Raney allow you to drill year round?
Yeah, absolutely.
So for those investors that have sort of sat around for a while and thought, all right, well, this company's drilling, that company's drilling, you guys are at a point where you're going to get some active results real soon and maybe turn on the jets.
Yeah, so like I said before, we completed the 2,000-meter program. The samples, the assays are in the laboratories as we speak, and as soon as we're able to share data with the market and our shareholders and the investment community at large, we'll do so. So news is forthcoming, and hopefully we'll be able to go from there.
Are you in need of more capital, or are you good for the time being?
Yeah, so we did a raise a few months ago, and the program was fully funded. So we're comfortable where we are today, and we'll evaluate, our capital requirements, if need be, going forward. But for right now, I think it's status quo, and getting results to the market, and formulating a plan of where we want to explore next.
If there is one thing that you could let everybody know about Rockridge that people seem to miss, what would be that thing?
Two very highly prospective assets in Canada. One with a nice resource and a working foundation, and an incredibly low valuation relative to the asset value inside the company. There is an extreme disconnect between the value of the assets inside Rockridge and our market cap.
What do you put that down to? Is that just a general sector malaise, or is the investor maybe looking for something that they're not finding easily? Like, there seems to be a lot of churn on the resource investor community. It's not really lighting up in uranium where it's been promising to. It's not really lighting up in lithium where it's been promising to. Do you think that people are just sitting on their cash and waiting for a catalyst, or what is it?
Yeah, so that's a great question. I think that if I had to give some explanation to why there's a malaise in junior commodity land, in fact, most commodity stocks, whether they're very, very large copper or gold or multi-metal plays, all the way down to the micro caps, you have an S&P 500, which is at or near its highs, that's being pulled upwards by 10 stocks. And those 10 mega cap stocks happen to be technology companies. And so the market is still chasing growth in and amongst the biggest companies in the world. And so until the market wants to, move away from that sector of the market, and those very, very large, equities, I don't know how the rest of the market catches a real bid, right? So the underbelly of the market I see as being somewhat unhealthy, which includes the junior resource market. And there's no more telling sign than by pulling up the volumes on like the TSXV or the GDX or the GDXJ, or whatever subsector, the uranium stocks. Like, volumes are incredibly depressed, and they are at multi-year lows. So apathy is high, desirability is low, and until we see a rotation of capital, I think what I'm getting at, a
Mhm.
rotation of capital, I think that we remain here in this type of market sentiment.
It's interesting to me. Like, I keep thinking that the rubber band has to snap back at some point. People have to do deals, or they starve. Do do you get a sense that that time might be coming, or something has to change here? The global economy just can't work on everybody standing still.
I think corporate balance sheets are getting stretched when in the cyclical parts of the economy. I think that the cost of capital, the cost of debt, is clearly rising. So availability of capital is clearly being constrained. Um, I don't necessarily know how this plays out. I know that the markets that we operate in are incredibly cyclical, and that the demand for materials, the demand for real assets, for hard assets, whether it's precious metals or base metals, that they always continue. And so like I said, we just need that market shift.
I always tell people, if you can find companies that are undervalued and have imminent news and are run by people who are serious people, that's an outlier on the Canadian public markets, and something to go after regardless of what's happening around them. Your stock right now it looks like a coiled spring to me. And if the news that's coming out is in any way good news and people will see it, that it should be a really interesting time for people that hold your stock in the next couple of months.
I hope so. We have some long term, very patient investors, and The number one priority of mine and our team at Rockridge is to enhance the value of our shares in our company. So I agree. I think we do have great assets, a coiled spring, a very tightly wrapped elastic band. There's all types of analogies, but I tend to agree that if the news is good and the value is there, then the share price should take care of itself.
At this price, are insiders stacking up?
So I just recently bought a block of stock, and just given where we are with the completion of the drilling program, you probably won't see me in the market for a little while. But we've been buying stock. Our founder, president of the company, Jordan Tremble, has been active. Our VP Corp Dev has been active in the market. I'm the CEO of the company. I've been active, and so I think you'll continue to see us buying back shares.
So you never hear a CEO saying, "Buy my stock, now's the time." But the good sign to do so is when they're doing exactly that.
I bought the private placement at 3.5 cents. I just bought 100,000 shares in the market, just filed on SETI. I bought intermittently in between. Like I said, the insiders have been acquiring shares. So I believe in the value of the business. I really, really believe in the value of the two projects that we have. And like I said to you earlier, there's a real disconnect between asset value and market value. So perception and reality are just completely out of whack here.
Yeah. So if there's a time when the casual investor might want to be looking at Rockridge, this is a pretty good time to be doing it.
Yeah, I think so.
Excellent. Well, look, we'll touch base with you again when the news on those assays comes out, and he's hoping that the rest of the market sees what we see.
I hope so too, Chris. Thank you very much for your time. Pleasure speaking with you.
Appreciate it.
Okay, take care, guys.
Ticker symbol is ROCK. The company is Rockridge Resources. If you're a metal nut, at least put them on your watch list and maybe have a nibble. This is the time.